Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Abbott Labs stock so we can determine if it's a buy or a sell. Abbott Labs is a medical device and healthcare company. They split off their research part of the business into AbbV, ticker ABBV, and that was back in 2013. AbbV's market cap is $280 billion. Abbott Labs' well-known products are Pedialyte, Similac, Ensure, Glucerna, and many more. The company is headquartered in North Chicago, Illinois, and was founded in 1888. The ticker trades on the New York Stock Exchange, Deutsche Börse, Mexican Bolsa, London Stock Exchange, Zitra, Swiss, Sao Paulo, Buenos Aires, Santiago, and Kazakhstan Stock Exchange. Let's get started with the model. This is a large cap company, 180 billion market cap. They're trading at 105 a share, and they have 1.7 billion shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video, and free cash flow is cash flow from operations minus capital expenditures. They did have lots of free cash flow in 2021, $8.6 billion. It's still high in 2022 at $7.8 billion. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that was $7 billion in 2021 and 2022. Revenue is a sales for the company, and that grows each year from $32 billion way up to $44 billion. Let's look at the capital structure. They have $37 billion of equity, $18 billion of debt. They're 67% equity, 33% debt. If they used all the cash on their balance sheet to pay down their debt, they would only have $7.5 billion of debt left over. I use the middle whack on Finbox, 9.5%, and that's a discount rate we're going to apply to the future cash flows. We estimated 4 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 4, that's $122 billion. We discounted those numbers back to today using the weighted average cost of capital, and we get a value of the company of $109 billion. We divide that by 1.7 billion shares, and we get a calculated stock price of $63. They're trading at 105, so they're trading at a 66% premium. It's a sell according to the model. The website Simply Wall Street's valuation is 116. They're saying it's 10.5% undervalued. 12 analysts priced this stock, and the average price target is 121. The low is 107. The high is 136. This is where the stock has been trading at the last 5 years. At the end of 2021, it broke past 140, its all-time high. It has come down a little bit since then. It's sitting around 105. It did fall to below 100 a few months ago, but it's still trading a lot higher than what it was pre-2021. They do pay a dividend of 51 cents, and they raise their dividend each year. Their yield is 2%. To calculate the dividend yield, you just multiply the last dividend payment by 4, so that's $2.04, and take that number and divide by the stock price. The dividend is affordable. It's 45% of their free cash flow, 51% of their net income. There are 151 companies in the same industry as Abbott. And if Abbott has a number in red, they're worse than the average. If they have a number in blue, they're better than the average. They spend more than any other company in CapEx. These are investments in property, plant, and equipment. Their debt-to-equity ratio is a little lower than average. For every dollar of equity, they have 50 cents of debt. They pay a good dividend relative to the average. They generate lots of free cash flow, more than anybody else. Their price to book is about average. Their PE, price to free cash flow, and price to sales are better than average. They generate more revenue than any company on this list, but their 5-year annual revenue growth rate is only 10%. The average is 20%, but they are higher than 2nd, 3rd, 4th, and 5th on the list. Since they have positive net income, they have a positive ROA and ROE. So to summarize, I have them trading at a 66% premium, and I rank their free cash flows and revenue 7 out of 10, and their ratio 6 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.